Someone has already done and is already doing what you want to do. And no, they didn't fall into a rich family to do so. They were not born lucky. You know you can be more. You can have more, do more, and be more. You know this. You wouldn't be listening otherwise.
And welcome back to another episode of Key Factors Podcast, Real Estate AF, and the AF stands for And Finance. And I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And lately, guys, we have been gaining some traction on YouTube. I want to quickly throw that up on the screen if you could, JC. We are just under 6,000 subscribers. I made the announcement of hitting 5,000 subscribers at the beginning of last week. So that's 1,000 new listeners in less than a week. I'm super proud of that. And as mentioned in previous episodes, I did not intend to do this to make money, anything like that. This is more so cheaper than therapy. So without going too far in depth into my situation here with the podcast, I want to introduce a guest. And this guest, gosh, I look up to, I think he's a great dude and also a military veteran who specializes in VA loans. So without further ado, let me introduce John Hurd of the John Hurd Team. What's happening?
Thanks, Mark. Thanks for having me.
Heck yeah, man.
This is a cool setup you guys got here.
Not bad, huh?
Yeah.
We've come a long way. We started with cell phones and worked our way up. Didn't want to spend a lot of money because we weren't making any money. We still aren't technically. This is just to showcase other experts in the industry to give you a platform and showcase everything that you can give to the listeners. So that being said, we're going to be talking about VA loans, myths and misnomers that are out there in the industry. You may see them on social media, things of that nature. But we've got a couple of things to do before we get started. So the first thing, Mr. John Hurd brought us a fresh new bottle of Don Julio, and we are definitely going to hit that right now. Just in celebration of my birthday and John's birthday. So today is the 18th that we're recording this. It's my birthday. And then tomorrow is John Hurd's birthday. So in celebration of that, cheers, my friend.
Happy birthday, brother.
Happy birthday to you. Mm-hmm. Oh, that's smooth. That's real smooth. Yeah.
Absolutely.
That's not tequila. That's just tequila. I like it.
I think that's what tequila should taste like.
Right? Amen.
Yeah.
Very smooth. Okay, so now that we're warmed up, John, tell us about yourself, man. Tell us, what did you do before you got into mortgage?
Before I got into mortgage, I've been a San Antonio resident nearly my whole life.
Okay.
Grew up, went to Alamo Heights High School, class of 96, went straight into the Marines right after that. Okay. And did my service with the Marines. I got out, went to school. I went to Trinity.
Okay.
And so I've been here just about my whole life, except for my time in the military. And once I wrapped up school, I thought I wanted to be an options trader.
Okay. Okay.
Yeah. Derivative securities fascinated me.
Yeah, man. It is a fascinating sector for sure.
And around that time, Lehman Brothers was recruiting, and I was kind of excited because they were the largest investment banking firm in the world. Okay. And it was a mortgage recruiter for Lehman Brothers. You remember Aurora? Yeah. I don't know if Aurora was a wholesale lender back then, and they kind of basically showed me what I could possibly make in the mortgage side of things versus starting out in options. Okay. And so I was like, okay, I'll learn mortgages. Right. And it kind of spun from there. And so I worked in mortgages ever since.
Holy cow. So you've been in mortgage for what now, 15 years or so?
I think going on 19.
19 years. Okay, very good. Dang. You got a couple of years on me. And it definitely shows, man. You know your stuff. And I know when we worked together back at Directions, I saw you as somebody that was upper echelon, somebody that always gave it to your customers straight, gave it to your colleagues straight. And that is something that I resonated and related to because I'm the same way in regards to no sugarcoating. Let's not come up with a way that we can tell the customer around what the truth is. Just give them the truth, set the right expectations. Right. And it has done a good a fair amount of good for you, your family, and your team. truly.
Yeah, absolutely. Absolutely. I like to underpromise and overdeliver.
Yeah.
Instead of vice versa. There's so many people out there that try to overhype and oversell.
Yeah.
And then they can't end up delivering.
It's true.
And that's not my MO.
Yeah, I mean, in this space of mortgage, we've got a lot of new to the business loan officers that don't quite yet know all the guidelines and ins and outs of mortgage loans, and there are a lot. The reason why I jumped into mortgage was I was fascinated with being an attorney, and when I went through all the real estate classes, it was like, this is not for me. When I jumped over to the mortgage side, it's like, whoa, guidelines, regulations, all these things and different programs with their nuances. I felt like I was like a mini attorney going to find the way to help my customer succeed in their journey, you know? It felt really good. And that's why I've continued and done a great job. And I'm sure you as well. Yeah. So in your military background with mortgage, would you say that there's any correlation or anything that you have brought from being a Marine going into mortgage? Is there any type of, how do I say it? Have you pulled any of the traits that you not necessarily learned, but went through into the mortgage side of things?
I would say willingness to get the job done.
Okay.
You know, when I set out to do something, you can ask my wife, you can ask my friends, I'm going to do it.
Yeah.
I'm going to find a way. It's going to get done.
Absolutely.
You know, so I think that's a big part of the Marine culture, right? You know, the Marines, you know, they kind of have a motto. It's, you know, mission accomplishment above all else.
I like that.
Right. And so actually, I think they even place it above troop welfare.
Okay. Okay.
Mission accomplishment is the number one thing. And so when I set my mind to do something, I want to do it. Right. If I tell this customer, hey, we can help you, we're going to help them.
Yeah.
Right. No matter what.
I definitely agree with that. And with you, I believe that you work with your wife, Norma. How difficult is that? Because I work with my wife, but on a completely different side of things. She's on the real estate insurance side. I'm on the mortgage side. I met my wife at a bank that we both worked at. So productive, but not very productive at the same time. How does that work for you guys?
It works good because we kind of separate ourselves from each other.
Okay.
She has a different style than myself, of course. And so she does things her way. And then, you know, I can kind of do things my way. You know, sometimes, you know, we have a daughter. And so sometimes she's, you know, that takes a lot of her time.
Sure.
And so sometimes if she gets a client or a lead, they ask the client if it's okay if I help them.
Yeah.
And never has there been a time they said, no, your husband can't help me.
Yeah.
The only really time is if they're a complete Spanish speaker.
Okay.
Right? And Norma excels at that because that's her first language.
That's right.
But other than that, we kind of separate ourselves a little bit on this is your stuff. And you know, once a file goes into processing, then maybe I'll back it up, you know, and I'll help push it along and keep it moving. But yeah, other than that, we kind of separate ourselves a little bit on that regard. So
it makes sense. And I do want to eventually talk about today's market and what's going on, what you're seeing out there. And we'll save that for the end. But I think we can get into this concept of VA loans and what consumers are seeing, what they're faced with, and what misinformation is out there. There's a lot of things that, in my opinion, are myths that are being spread and unknowing to the person that's spreading it. It's affecting veterans, their ability to qualify, and more importantly, their ability or desire to move forward with even utilizing their VA benefits to build an empire, so to speak, you know? So that being the case, I mean, you do quite a few of VA loans.
I do.
You know your ins and outs of that.
Most of them.
Yeah. I mean, I tell you what, one thing that is very certain in our industry is change. And there are things that are always constantly changing. The VA loan guidelines is one of them that we've got to kind of stay on our toes to make sure that, did that change? Similar to, what was it last year, the year before that, they changed the VA funding fee. And it was like, okay, this might be for the better. Oh man, it went up. And you're like, okay, well, let's just articulate it or educate our borrowers to let them know that, hey, if you want to put some money down, we can shrink this VA fee, funding fee, et cetera. But I've got a list of myths that I want to go over and just kind of chat about each one of them. And hopefully by way of this discussion, there's veterans out there that can either get off of the fence, have a better understanding of what they could possibly, not necessarily qualify for, but what they're currently able to do with their VA benefits, So the first one on here is VA loans are only for veterans. And when I read that at first, I went, wait a minute. Yes, they are. Oh, this is kind of a gotcha moment. Do you know why they're not only for veterans?
I can take a stab at it.
Go for it.
Well, a spouse can be on a VA loan.
That's true.
Right. And a spouse might not have served.
It's true.
So you can have a surviving spouse. I'm trying to think of the other.
Matter of fact, I'm doing a surviving spouse right now. And that her husband, who has passed away, did not die during battle or anything like that. But when he passed away, they were able to tie it back to something that originated while he was in the military.
Connected to his disability.
That's right.
Absolutely.
So just like me, I think you're having the same conundrum. I'm going, wait a minute. Yes, it is. I totally forgot active duty members are not veterans yet. They're active duty. So they absolutely can utilize their VA loan.
Absolutely.
But when I read this, I'm like, what are you talking about? Yes, it is veterans. Oh, duh. And some of the guides for that, matter of fact, maybe I can look that up here. JC, if you could throw on the screen, let's see here. How long does it take a veteran to earn their COE to get a VA loan? And there are a bunch of different qualifications. It's like 90 hours for this. And okay, so here we go. Online application, mail-in application, Maybe I should have been more specific. How long does a veteran or active duty member have to serve to obtain their VA entitlements?
For some reason, I'm thinking like 2 years active duty time.
I think it's like 180 days of wartime or so. There we go. Okay, here we go. So for those of you listening that are wondering, how do I get my VA entitlements? We've got it right here for you. We've got
24 months of continuous active duty.
There you go.
For active duty members.
So between World War II, okay, so this may or may not still pertain to anybody, this top line that I'm highlighting here. That was 90 days of active wartime. And then you've got Gulf War, which is, just like John said, 2 years, at least 90 days. And I believe that's if you're active duty or out, what do they call that? Deployed. In deployment. Then during peacetime, it is 181 days of continuous active duty. Current service members or current service requirements, and this was after September 7th of 1980. Let's see here, 24 months continuous active duty. So you're correct on that for sure. And then National Guard, this is one that I get quite often, and anytime somebody says I'm in the National Guard, I slow down a bit because at times they believe that they already have their entitlements. And this one's kind of nuanced. And this is at least 6 years in service, but they also can get called to active duty for a certain period of time.
Sure.
And earn them that way.
Sure.
So yeah, that's just... Those of you out there, there's many different ways to earn your certificate of eligibility, and that's what we refer to as a COE. That's what we're looking for in order to gain those entitlements. So let's go to the next one here. We've got, you can use a VA loan only once. What are your thoughts on that?
Not true.
Not true at all, right? No. Tell us more about it.
So the VA gives every qualified veteran a certain amount of entitlement, right? And you can use that entitlement to buy one, two, and now with the entitlement increase, with the loan limit increases, sometimes three now. Once you pay off a VA loan, your entitlement's restored, and you can use that over and over and over again. So there is really no limit.
I like that. Yeah, I mean, and that's something that is a huge myth because I've got current homeowners that will come to me and say, I've got to use the conventional loan, or can we use this other type of loan? And my first question is, I'm looking at your credit report and you've got a VA loan right now. Why would you want to do that? Well, I can only use my VA loan once. Well, guys, you can also utilize your bonus entitlements. And just like John said, with the new increase of those limits, in the past, just about every time you utilize those bonus entitlements, you had to put down 25% of the difference of the sales price or the loan amount and your entitlements amount.
Right.
And now with that increase, chances are you won't have to put anything down in using those bonus entitlements.
Right. Absolutely.
I've got a guy right now that is buying. He owns a home for $300,000 and he's getting ready to start investing, and came to me and said, "Hey, and shout out Will. I know you might be watching this. Chances are that he wanted to leverage that entitlements, buy himself a duplex, live in one of the units and rent out the other one to start, and then rent the current that he was already in." He asked me, "Is that possible?" I said, "Why not? If that's what your MO, that's what your motivation is, who's to tell you otherwise?"
Exactly.
You've got the entitlements. So he sends me the property and it's $490,000. And I went, "Oh man, we might need a down payment." Plug it into the equation that we use.
Right.
Sure enough, no money down. So surprise to him and surprise to me, because like we said, things change,
Absolutely.
It's pretty cool. So let's see here. Let's go on to the next one. VA loans have high interest rates. And this is something that I do hear quite often. What are your thoughts on that?
Throughout my 19 years in mortgage, most of the time they've been lower than conventional. Because they have a built-in guarantee from the VA. So the VA is not an actual lender. It's a loan type. The VA is actually guaranteeing 25% of that loan. The banks are the ones that are doing the lending, right?
That's right.
VA. So it's a safe investment for the banks when they have a 25% of that loan guaranteed. And so because of that, VA rates are typically a little bit lower because they do represent a little bit less risk.
Correct.
So,
Correct.
There was a little bit of a time, I would say last year, where you saw conventional rates in VA neck and neck, maybe an eighth of a point lower on a conventional, but we've since corrected, and now VA is firmly below conventional rates right now.
Definitely. And there is a loan called a tax vet loan, ladies and gentlemen, that I like to use as a benchmark for the rest of the market. So when you've got somebody, let's say you're shopping around for mortgages, and you've got some bank representative that says, "Yes, today the mortgage rates are 5.25%." And you're like, "Wait a minute, everywhere else is at 7%, 6.5%. How is that right?" One thing I like to do, and JC, if you want to throw the reference up one more time, I'm going to go to this thing, TaxVet.
TVLB.org.
There you go.
TVLB.
TVLB.org. Boom. We're going to pull that. Oh, nope. I probably typed in TaxVet loan rates. Boom. And it's going to be that one right there. Boop. And we're going to go to home loans. And right now, it's sitting at a 6.4% rate, and that is their posted rate. This changes weekly. And then if you are a veteran with more than 30% disability, you get 0.5 or a half a point off of that rate. So your rate would actually be a 5.9. So if there are lenders out there that are offering you way less than this rate here, chances are you're going to be paying a substantial amount of points. And that is any time in the market, because this kind of keeps up with what's going on in the market. I mean, it's stand pretty accurate throughout my career thus far. Now, not every lender offers it, but at least you know kind of where the basis is for what someone's offering you in regards to your mortgage financing. Right. So yeah, higher rates is something that is all relative, in my opinion. We're seeing rates all over the place. Different mortgage companies are pulling the lever up and down, depending on their month and overhead and production, et cetera. Because let's face it, that's how we make money in our industry. We don't do this for free. But at the same time, we want our customers to have the best if they possibly can. So it's a tough one. And those of you out there shopping for mortgage rates, I mean, you got to find a trusted advisor that will give you the accurate information. They're not there. Now, mind you, we don't make any extra money charging you more or a higher interest rate on a loan. That hands down, that changed before I got in the mortgage business. John, you know what? Let's take a pause. What was that like back in the day? Because you were in the business at the time when you were able to charge more for the rate just based on their credit score, things of that nature. I got in 2012, so it had already changed, and I would have veterans coming to me like, "Man, if you were in the business back in the day, you'd be retired." And I'm like, "I don't even know what you're talking about. How? I don't know any different." If that makes sense. What was that like?
It was good and bad in a way. Some people took advantage of it.
Oh, for sure.
Which are some of the rules. Those of us that, try to adhere to the golden rule, right?
Yes.
Treat others as you wish to be treated, right? You give them a fair rate, or, something that you would take or you would offer your friends and family.
Sure.
And so, there were some bad apples, but you could actually select almost any rate you want, and whatever the yield spread premium was, you would split with your bank.
Wow.
And so were there people that would take advantage of that, or maybe push somebody that would easily qualify for a conventional loan into an FHA because there might be more revenue? There was some of that, and fortunately, I think a lot of those people got out.
I was going to say the same.
The new rules.
And from what I have gathered over the many years that I've been doing this, is the talk about prior to these changes, most, if not all, of the loan officers that were taking advantage of customers are no longer in the business. And I believe it has a lot to do with the adaptation of how do you do business the right way versus how do you do business that only benefits you as the loan officer.
Right.
Yeah. But ethics is a huge thing in our industry,
and it can be a little still to this day. But we cannot be paid on interest rate. We cannot be paid on loan program.
Right.
Period. End of story. We're pretty much our compensation is based off loan amount.
That's right.
That's it.
And I like that change. I mean, I don't know any different. I don't know any different. So let's see the next one here. You need a perfect credit score in order to get a VA loan. Is that true?
Absolutely not.
Why is that?
Well, technically, and I don't like when other people say that the VA doesn't have a minimum credit score.
Right.
But they don't.
Right.
But the VA is also not lending the money.
Boom. I was right. I was getting ready to write it down, but you just said it. Good.
So the VA doesn't have a credit score requirement, but the banks are the ones lending the money. So the banks are going to come in and say, okay, well, our minimum, one bank might say my minimum's 580, or another bank might say my minimum 600. So to answer your question, no, you don't need a perfect credit score for a VA loan. However, the banks will imply some kind of standard for as far as credit score to let you participate with the VA with them.
Right. And I mean, well put. And I want to kind of break what you're saying down for the listeners in almost a layman, because that was beautifully articulated. On our side of the tracks, when it comes to that scenario, you've got a, how do we call it? It's a investor that is purchasing these loans. They're more times than not lending the money to the banks or lending the money to the originator so that they can originate that loan according to their guidelines, and then they end up buying that loan. The VA, and John mentioned it a bit ago, they don't actually do loans. They are the ones that guarantee 25% of that loan in itself. But they're not the ones lending the money. So when it comes to the VA guidelines, no, the VA guidelines don't even require a minimum credit score in order to get a VA loan. But the person that's loaning you that money, guarantee there's going to be some minimum credit score requirement, whether it be 580, 620, whatever the case, and they can set those own parameters for their institution. And typically they're called overlays. So when you hear the term overlay, not orale, overlay, that's just kind of what we use lingo-wise in the industry to say you've got additional layers that in order to sell this loan, you've got to meet before that investor will purchase it.
Absolutely.
Yeah. Okay, so now that we've gotten through that, let's see here. VA loans take too long to process. What are your thoughts on that?
I don't know why they would take anything any longer than an FHA or conventional.
Same here.
Yeah.
I mean, that is a myth that I hear quite often from listing agents that will call me and say, hey, I've got your approval letter here, and it shows that they're using a VA loan. Have they considered going conventionally? And my response to them quite often is, no, not at all, because the VA loan is the best loan for them. If you'd like to fill my shoes, come on over and sit in the seat. But as of right now, if you'd like to accept the offer, these are the terms. Get with the buyer's agent so that you guys can hammer that out. But on our side, we've got a solid veteran who served their country and they're wanting to buy your home.
Right. No.
You know,
so there's been a lot of misnomers. And I've actually had in the last probably month, I've had 3 veterans not get their offers accepted because they were using VA financing, which was really frustrating.
Yeah.
That you have somebody who has taken the time and served his country honorably, earned this benefit, and then just to try to buy a home using his benefit, and the seller says no because he was been given bad information, maybe by the listing agent, or maybe he read it online, whatever the case. Yeah. But some of the misnomers are, there's a lot of non-allowable fees that a bank might charge that the seller would have to pick up. And that's generally not the case unless we're talking about a super small loan amount, generally maybe under maybe 140,000, which is well below the average, the loan. And it's such a nominal fee that most lenders will pick it up and or maybe split it with the buyer's agent. And because it's not a large sum of money, but it doesn't apply in 95% of the purchase transactions. Another misnomer would be like they're too strict on the appraisals, right? And then generally they are not. I haven't had a lot of issues with the VA appraisals. There are some caveats that they look for, maybe so more so than on a conventional loan, but there are not very many of them.
That's right.
So like wood rot, they don't like wood rot. They they want you to sand it and paint it so there termites can't get in there and stuff like that.
That's right.
They generally want it to conform to the neighborhood, and they want to make sure there's no health or safety issues, similar to just about every other appraisal out there.
That's exactly right. And I'm glad you mentioned that, because a lot of folks out there believe that conventional is the same as cash when it comes to an appraisal, and that is not the case. I think the overall goal in an appraiser, 2 things, and you can correct me if I'm wrong or if I'm missing anything, but number 1, does it adhere to the value of the other properties around the area in recent time, typically 6-month period? Number 2, is the home safe and livable? Is there anything that is going to cause this new homeowner to go, okay, I can't live here anymore because it's not safe, thus putting the lender or investor at risk of foreclosing? Other than that, yes, there are little things like if the house should have a water heater, put the damn water heater in there. If there is a missing window, you got to have a window. Right. And I hear it quite often. Yeah, well, there's some wood rot, or there's floorboards missing on the stairs leading up to the master bedroom. We need to go conventional. You're still going to get those requirements on an appraisal from an appraiser that says, hey guys, this doesn't fly.
Absolutely. Yeah. If there's wires hanging out of the ceiling from a ceiling fan that's no longer there, you're going to get flagged on a conventional appraisal too, right?
Absolutely.
That's a safety issue, right?
Yep.
If you have a electrical panel that has wire shooting out of it or spark shooting out of it,
right,
you're going to get called for that.
Yeah. Yeah. And then the last thing when it comes to appraisals and VA and misconceptions is VA appraisals are always short. In my opinion, they've actually been the higher ones that come in, simply because most of the time they have closing costs that they're contributing, and that veteran typically is a veteran appraiser. Number 1 in their trade and their craft of being an appraiser for a while, certified to do VA loans, but most of the time they're also veterans themselves. That in itself is something that they're looking out for the veteran. They don't want to put them in a situation to where they're upside down in their house more than the funding fee that you get to roll into the loan.
Right. No, absolutely. I think most VA appraisers want to do what's best for the veteran, and they like you said, they don't want to put them in a situation, and we've seen it before where the both of the agents are pushing the envelope, hard on value.
It's true,
and there's absolutely nothing no comps to support that value. And they're like, well, if somebody's willing to pay it, that's what it's worth. Yes and no.
That's exactly.
Not to a lender.
Go ahead. Yeah, go ahead and elaborate on that, because I think this is something that, number one, we can probably clip out and make you a badass reel or something, because the idea behind what's happening in our market on appraisals, and once the appraisal comes back short from a lender's perspective, and then from a buyer's agent perspective and listing agent's perspective, what I've seen too much of is the buyer's agent fighting for the sellers to get this price that they can't really justify based on the comparables. What drives me insane is when a realtor, and I'm going to say it, realtor comes to us and says, this appraiser sucks. They don't know what they're doing. This thing should appraise $20,000 more, but instead it's $20,000 short. Instant response. What is your response typically?
Do you have any comps to support your value?
Boom. Where are the comps? Because before you took this listing, before you put it out there, I'm hoping that you ran comps to make sure that this wasn't a hope and a prayer or what the seller believed it was worth based on their feelings of how much they've put into it and the memories that they've had. And, oh yeah, we put $100,000 pool, so we should get 100,000 more back. It's just not the case.
Right.
I mean,
but it's going to happen on a conventional as well. You know, I had a situation, I don't know, several months ago where, a VA appraisal came in $30,000 short. We kind of got a heads up by the appraiser ahead of time before he finished his report, and we asked for some additional comps from the listing agent and possibly the buyer's agent. Well, the comps that they had sent me, I looked this up in MLS, and the comps they sent me just were not comps. They were the highest priced sales in the neighborhood. They all had extensive upgrades where our subject did not, and there was just no way to use those as comps. And in reading the appraisal report, that appraiser tried to get as much value as he could.
That's right.
But at the end of the day, the comps that they were supported or were given by the agents, they were not comps. And it kind of showed a little bit of naivete on the part of the agents.
Definitely. I mean, I got two things here. The first thing goes with exactly what you were saying is when that agent is utilizing the comps that they believe that are actual comparables, are they within a certain mile radius? Is there one that is better to use versus not? Was it this year or was it 2020?
Right.
There's just so many little nuances to the concept of that. But the biggest thing that gets me is we'll send them the appraisal, and that's typically the only time that we'll send out the appraisal to all parties is when it's short, so that, hey, go ahead, read it, examine it, and give us any kind of errors that you see.
Right.
Because they're still human. If they messed up on the square footage, which is, in my opinion, the biggest reason as to why it would be short or not.
Sure.
And most of the time, they don't read it. Why? Because they don't know how. They don't actually take the time to read the appraisal, study it, understand what a comparable is, why they're making the adjustments.
Right.
You know what I mean?
Right. And in this particular case, the appraiser used 5 comparables within 400 meters of our subject, and square foot within 50 feet of each, of all the comps. And so there was really no justification to say this appraiser was wrong,
right,
or to go outside the neighborhood when there were so many comparables within such a short distance of our subject property.
Correct.
We don't use another a comparable in 3 neighborhoods over when there's literally 5 on the same street.
Right. And that how and why is it so difficult for us to have to articulate that and fight for that every single time,
Right.
In addition, and I mentioned the buyer's agent in this little debacle, conundrum when it comes about, is why are you fighting for the sellers? At the end of the day, one thing that you guys should know is that when you do or accept a VA loan, that appraisal is stuck for the property for at least 4 months. So it's not like they're going to go and put it on the market and think that they can order a brand new appraisal unless it's conventional. Hey, you want to list it for conventional or cash only?
I think that's recently changed.
Oh, is it?
Last couple of years. So if a VA appraisal used to say at the top for any qualified veteran.
Okay.
And that appraisal would stick with that house for a period of time.
Yep.
That has since changed. Now the VA has the appraiser put the specific veteran's name on the appraisal report.
Oh, wow.
And if for some reason the transaction did not go through and the veteran walks away, hypothetically, if another veteran came and made a new offer on that same house, they would order a new appraisal.
Really?
Yes.
So it's not stuck with the case number anymore.
Correct.
Oh, wow. Okay. We'll have to research that. But there you go, guys. I learn something new every day, especially from John Hurd. Boom. And the last thing that I wanted to mention on the appraisal situation is appraisers for the VA or certified that have their SARs, they will typically call what's considered Tidewater before they give you a short appraisal, which gives both agents enough time to come up with the comparables so that they can put their numbers together before they just say, hey, it's short.
Right.
You know?
Yeah, that's generally an appraiser is going to do his research prior to going out to the property. And if he's having a hard time finding comps, he might reach out to the agents and say, hey guys, I'm having a hard time finding value here.
Yeah.
Can you help me? What comps did you guys use? And so on and so forth. So, help us out,
Absolutely.
Help the appraiser out. These are the comps I use. This is what I use to support the value. Share that with the appraiser, make his job a little bit easier.
Absolutely.
Because if you just want to throw your hands up in the air and say, oh no, I'm not going to help this guy. Well, you might, get the result.
That's exactly right.
that you don't want.
You get out what you put in.
Exactly.
Yes. And the VA loan is the only one that calls Tidewater. All the others will just say, nope, it's short. Here you go. Figure it out or dispute it and pay to fill out the grid, et cetera, et cetera. But I think that is very admirable. And at the same time, they're looking out for their veteran in that regard because they don't want them to lose the deal because they couldn't find the right appraisal comps.
Correct.
There could be situations where there's off-market properties that they don't have access to. And the realtor maybe has that they could provide as long as they show that it closed. Okay, that makes sense. Let's update that value.
Yeah, absolutely. And, a lot of good veteran real estate agents, when they do their listings, they know when the appraiser is going to go out and inspect. And a lot of times they'll put their comp sheets.
That's right.
There for the appraiser to see. He said, hey, this is what this is what we're using for comps and use it if you want. If not, okay. But yeah, I think, that's a sign of a good professional realtor that will do a comp sheet for an appraiser when he comes out.
I agree. And I've heard this a couple of times that don't you think that that's unethical for the realtor to put the comps there for the? Okay, tell me how that's unethical if the appraiser already has the purchase contract and knows the amount that they're trying to hit. I mean, essentially, if they went into it blindly, who knows what they would get as far as value. Value is what's that word that I do not like, JC? It is subjective. I can't stand that word. Anywho, okay, let's move on. We are here. Let's see. Take longer. Okay, VA loans are only for buying a home. Myth or true?
Myth.
Okay, why is that?
You can refinance a VA loan. They have what's called a IRL or interest rate reduction loan.
Okay.
Which is a no credit qualifying as long as you've made your mortgage payment on time for the last 12 months. We don't have to verify income. We don't have to verify assets. We can lower the rate and get that veteran into a lower payment.
Absolutely.
There is a full credit qualifying VA loan for people who might have been in a conventional loan for a period of time. Right. And they want to say, you know what, I want to use my VA benefit and switch this into a VA loan and lower the interest rate. Absolutely. Now, are you going to do a full credit qualify? Yes. But you can go from a conventional and refinance it into a VA loan.
That's right. And that is the IRL is something that I have been educating a lot of veterans on lately just because of rates being where they are. I'm not going to say they're high rates, but they're where they're at now, deemed by the market, essentially letting them know that, hey, as long as you're okay with this payment that we're at right now, it can only get better. I'm not saying that rates are going to come down for sure. I guarantee my crystal ball says exactly this time. Who knows, right?
Nobody knows.
But when they do, it's a lot less of a challenge for a veteran to tackle a refinance than it is for anybody else. Because just like you said, no appraisal, as long as you're making your payments on time for the last 12 months, and as long as there is a tangible benefit for that borrower, slam dunk.
Absolutely.
You don't even need an appraisal.
No appraisal. And we do what's called a mortgage-only credit pull.
There you go.
So we're only pulling the mortgage history on the credit report, nothing else. We're not going to see the credit cards or student loans or auto loans. We're going to see none of that. We're going to see a credit score and the mortgage payment history, and that's it.
That's right. I mean, those are beautiful scenarios for our veterans that, it's just more work and more trouble for them to keep up with that, because we're talking about, I don't know what the statistic is, but I'm sure half of them have some type of disability from serving, and this is not their lane. This is not what they do for a living. They're not financial gurus. So they rely and depend on folks like you and I to help guide them through this process. And when you're going through a refinance, it can be pretty daunting for the most part. But if you're going through an IRL, it's like, sit back, relax. We got this.
Exactly. Yeah. No income on the application, no assets on the application. It's just a no credit qualifying. You've made your payments on time, and we can lower your rate a certain amount. Now, the VA is going to stipulate that we're not going to lower you from a 6.5 to a 6.3, right? Because there's not enough financial benefit.
That's right.
So there's still cost associated with the refinance. Setting up a new escrow account, title policy, things of that nature.
That's right.
And so there's got to be a benefit to the veteran. You got to be lowering the interest rate a certain amount, or making the payment be reduced by a certain amount.
That's right.
It can't just be a refinance just a refinance.
Yeah, and that's a beautiful thing right there. That is a precautionary measure that is put in place so that loan officers can't take advantage of veterans that don't know any better.
Right.
You can't close on a VA IRL unless there's a tangible benefit to you as the borrower.
Correct. Yeah.
Simple.
Yeah.
I love that. Okay, so let's see here. We already talked about appraisals. We skipped a couple of these things when we went off on our tangent. I love it. Okay, here's a good one. You can get a VA loan with no money down.
True.
True?
Yeah.
Is it possible every time?
Trying to think of a situation where it's not possible. Maybe
How about no
using
closing cost?
You're using your bonus entitlement. Well, closing cost is different from down payment.
That's what I wanted to touch on, because a lot of folks will put on social media, and matter of fact, John Hudson and I talk about this a lot in these discussions. It's the misguided marketing, the intactical marketing that people put out there, which is use your VA loan and won't pay any money out of pocket. Well, that's not always the case, because if you as the realtor don't get them closing cost, the lender's not going to pay all of their closing costs for them.
Right.
And if that is the case, it'll be in the rate some way, shape, or form.
Correct.
So when people believe that there's zero money down, matter of fact, I had it probably a week ago. We were going over they just received a contract, and I was the second lender. And essentially they said, well, I thought I didn't need to pay any money out of pocket. And I'm like, well, was it discussed with your agent that you needed closing costs, things of this nature? Right. Luckily, we were able to raise the sales price, get them closing costs, and get it to where it should have been from day one. But the idea that a VA loan requires zero money is a myth to a certain extent. Do you have to put money down? No, but you're going to have closing costs.
Well, a seller's going to want you to put at least earnest money down.
There you go. Yes, sir.
So that's something, right?
Yep.
Even if the closing costs are being paid for by the seller or another party, you still have to put that earnest money down. Now, you may get it back.
Right.
But there's a lot of people involved in a mortgage, right? There's a title company, there's appraisers, there's surveyors, and unfortunately, they don't like to work for free.
Yeah.
And so the costs associated with a VA loan are very similar to that of other financing.
That's right.
And they're required. Lenders are required to have title insurance.
That's right.
They're required to have an appraisal most times.
Right.
Most times, not all the time. They're required to see a survey, or the title company will require a survey to insure the title. And that's just the cost of obtaining financing.
It's true. It's true. The cost of getting money, it's funny. I have a lot of times people will say, when I'm talking to them, I request all the documents up front, and all the loan officers here do the same thing. A matter of fact, before we even meet with them via Zoom to give them their options, and a lot of times they will say, well, why are you asking me for so much? And my instant response, and it's intended to get them to laugh, I say, why are you asking me for so much money? And they're like, oh, yeah, okay, I get it. I get it. They laugh, and then we go on about it. But I explain to them that you're asking a substantial amount of funds with no money down right now on your VA loan. So therefore, I've got to make sure that you can pay this back. I've got to make sure that you're stable. Matter of fact, you're at a 580 credit score. So just making sure everything lines up, you know?
Right. No, absolutely. And a thing that you and I hear a lot lately is about the interest rates, right?
Yeah.
And you said something earlier in the show, it's all relative.
Yes.
And so people are not liking the fact that they have to pay 6.5% or whatever the case may be to borrow money, but they're not complaining when you can get 6% on a CD or getting a high yield checking account at 2%, which was unheard of.
Oh my goodness, for a long time. Yeah.
And with the Dow hitting almost 40,000 this year,
correct.
They're not complaining when they're seeing their 401k balances.
Very true. It's very true.
You don't get any of that when interest rates are at 2.75, 3%.
That's true. So, and it is a balance. That's exactly right. And folks believe that rates are up because somebody wants to punish them or something like that. And that's just not the case. That's literally the only lever that can be pulled in order to slow down inflation, to our knowledge thus far. Policies, of course, those can change. Presidents, those can change, but we do what we do with what we got.
Yeah, in an inflationary market, bond prices are going to suffer because bonds are debt instruments. So these big institutional investors, they sell off bonds, which is debt, to raise money to buy more mortgages.
That's right.
And when the dollar is worth less via inflation, that bond is going to be worth less unless they raise the interest rate.
That's right.
They got to keep attracting buyers of their bonds so they can buy mortgages. But if they have to keep paying the bonds or the price of the bonds go up,
that's right.
Interest rates have to go up.
That's exactly right. So that was very well articulated there. You must you must know your options in trading.
I think I messed all that up. But
no, that was good. Do you still dabble at all, or do you dabble at all? I know during COVID 2020 through 2022, I made and lost my ass all in the same breath of fresh air. It was like, yeah, let's go crypto. Let's go Six Flags and then sell Six Flags. Shit, I lost over here in crypto.
I don't dabble too much. We try to max out a 401k and then, I give a little bit of money to another institution for an IRA and just, let them
conservative.
I'm pretty conservative in that regard. I did want to get into crypto a little bit. I'm kind of glad I did.
I'm glad you didn't too, man. It was a fun ride, and it was cool to see certain things happen as quickly as they did, because that was unheard of with any kind of stock, to be honest. And was it a stock? Kind of, not really. Only on what is it called? What was that? The thing that I used, Robinhood.
Oh yes.
Oh my God, it was just too easy. Like, swipe, done. I just bought a whole bunch of them. Boop, just sold a whole bunch of them. And then I get from the IRS, like, you made $270,000. I'm like, no, I didn't. Did you guys not put the baseline? So we got to put an amendment in for that. But yeah, that's interesting stuff. And it's cool to tie the market to mortgages and how they can relate on the back end, because a lot of folks don't understand that they are totally tied together.
Yeah, absolutely. Mortgages are traded on the secondary market like stocks or, a commodity or,
right.
or any bond. So their prices can fluctuate daily. And sometimes clients will get frustrated because they're looking at a house, one day on a Monday, and you quote them an interest rate and they don't maybe contract until Thursday. Well, that rate might have changed an eighth of a point or a quarter of a point.
That's right.
And they're like, well, you told me this. I'm like, well, just like the stock market goes up and down every day, the bond market, also can change every day.
That's right.
And that affects certainly affects the interest rate.
100% great way to put that. And it allows me to say the following. For those of you out there, first-time buyers, second-time buyers, don't care how many times you bought a home before. If you're out there shopping for mortgage rates before you're actually under contract, you're doing yourself a total disservice. Why? because you can't lock it in until you're actually under contract. The idea behind locking in an interest rate for a certain amount of time is you are reserving X amount of funds under whoever investor is going to purchase those funds. There's penalties if you break that lock. There are penalties for going over the allotted time that you have locked this period. So the idea of shopping, I know when you go to real estate school, they tell you to tell your customers, make sure that they shop for interest rates. And then you've got big banks, Wells Fargo, Chase, that say, shop for your mortgage rates. No problem. But wait till you're under contract so you're not spinning your wheels. Come to find out that 5% rate that they gave you miraculously went up to 7% in the last 2 days. No, they knew that you couldn't lock it. So they got you to send their documents and everything else. And now all of a sudden you're stuck with the bag, you know?
Yeah.
It's true. Okay, JC, how are we doing on time?
50 minutes and 40 seconds.
Okay, we're almost there. Let's do a couple more of these, and then I want to talk about today's market with you.
Sure.
What the hell's going on? Let's see here. VA loans have hidden fees. What?
Depending on you look at hidden fees.
Okay.
There might be a couple fees that are not required on a conventional loan, i.e. termite. Right. Conventional loan does not require a termite inspection. The VA does.
Right.
But we're talking about $100 fee here to send an inspector out there to go inspect for wood destroying insects. It's pretty easy, pretty standard. And a lot of agents even do this on their conventional inspections as well.
That's right.
And so is it a hidden fee? I wouldn't say it's hidden. Is it an additional to what conventional requires? Maybe.
Right.
So
matter of fact, let's replace hidden with additional fees.
Right.
To make that a true statement, simply because nothing is hidden when you're buying a house and using a mortgage to do so. We are heavily regulated. We've got to disclose and then disclose and then disclose. So nothing in the regard is hidden. Matter of fact, we have to disclose fees that may or may not even be charged in the end. It's just if we don't disclose them and it happens to need to be charged, we're going to have to eat that if we didn't disclose it up front.
Correct.
And again, we're not in the business of giving away money.
I'm trying to think of another fee that might be required by the VA that's not required by other loan programs, but that's the first one that comes to mind.
Example, if someone's using a tax vet loan, there is a 1% participation fee, and the lenders can charge a 1% origination.
Correct.
But again, they're disclosed. These are things that you as the consumer, you as the realtor should be talking to your lender beforehand to go over how much closing costs is it going to take to get this deal done? Why? So that I can possibly get some from the sellers in that regard, and have the expectations, just like John said in the beginning, under promise, over deliver every single time.
Absolutely.
Yeah.
And you have happy clients.
Absolutely.
Repeat clients.
Yes. That's how you build your empire, with people that know that you're all about staying on the up and up with everything. Let's see here. I'm going to find one last one. Do VA loans are the last resort? I don't even like that. VA loans are more expensive in the long run. That is a right on the line of could be, but couldn't be. Want to talk about it for a bit?
Sure. So generally when you're looking at which is more expensive, you got to look at the interest rate and the closing cost.
That's right.
And so the closing cost and the interest rate generally can be reflected in the APR, but
Correct.
the APR is only for the first 5 years.
Correct.
Most mortgages in this day and age are not made to term, meaning you get a 30-year mortgage, you pay back only what you're supposed to pay every month for 30 years. I think the average life expectancy now is 8, 9
5
years?
to 8. Yep.
Okay. And so does a VA charge what's called a funding fee, right? And that's basically a fee to keep the program going.
That's right.
A lot of veterans are exempt from it because they have at least a 10% disability rating or greater.
That's right.
And so you just kind of have to do the math, work it out on an amortization table. You say, okay, a conventional rate at 6.75 and a VA versus at 6.5%. Look at the total cost of interest over the life of the loan. And, is the difference going to exceed that funding fee? If not, then they're not more expensive.
That's perfect. And there's one thing that definitely from a monthly payment standpoint that stands out to me on a VA loan that is not the same on any other program, especially compared to the amount of funds or lack of funds that you're putting down, which is the mortgage insurance. VA loans do not have mortgage insurance related. They do have the upfront funding fee if you're not more than 10% disabled or more.
Right.
But try that with an FHA loan, try that with a conventional loan, try that with a USDA loan. They've all got some bit of upfront or monthly mortgage insurance, private mortgage, or both. That's right. So the idea of a VA loan being more expensive in the long run, I think it is also relative. You've got to look at the big picture, not just comparing apples to oranges in that aspect.
Right. And we've had a 20-year war in Afghanistan that ended, a couple years ago. And so we have a lot of veterans, and a lot of them have disability ratings. And I would say most, I would say out of 10 VA loans that I do, 9 will have a disability rating of 10% or higher. And I think that's probably why the VA funding fee has increased. Right?
Yeah, that makes sense.
So many, we are at war for so long, and so many people were injured, and they're coming back, and now they want to use their benefits. And so they weren't getting the funding that they needed to support the program.
Man, I've never thought about it that way, or even in that perspective. You just made me take a bird's eye view and go, oh, okay, that does make great sense. Yeah, I mean, we have been at war. There's plenty of veterans that have since retired, been awarded their benefits. And like you said, because most of the VA loans that I do, same thing. They have some, at least 10%. Now, mind you, if you're 100% veteran, you don't pay any property taxes. And that's nice.
That's very nice.
Yeah. I've got my neighbor next door, 100% veteran. I mean, we pay $30,000 a year in property taxes alone. And I'm like, dude, do you want to adopt a grown man? But yeah, okay. So we were able to go through quite a bit of myths and misnomers that the VA loan itself have. And I'm glad I got to have that conversation with you, because you know your shit, and I think that the people out there, listening, viewing, want to be told the truth, not some sugar-coated salesman act. And that's not what we got here today. And I definitely appreciate that. Yeah. Most of what we talked about wasn't very opinionated. It was total facts, and then giving our perspective on it.
Right.
Let's talk about some opinions. What the hell's going on with the market today? What are you seeing out there?
Within the last couple of weeks, what I'm seeing is bad news is bad news and good news is good news.
I like that.
For a long time, when we would see news, financial news that would hit the market, and generally that would actually help interest rates. It didn't help them.
Right.
Or we would see, news that would hurt interest rates. It didn't hurt them. The Fed last year, towards the tail end of last year in December, said they were going to make about 3 or 4 rate cuts.
Right.
That was in December. And then in January, they basically said, well, hold my beer.
That's right.
They said, well, we maybe jumped the gun a little bit on that.
Yeah, whoops.
And we got to February and March, and it's like, okay, well, we'll be lucky that we don't raise them again.
Insert foot into mouth. That's right.
But in the last couple of weeks, there's been some economic data to support this economy is slowing, right? Okay. The jobs number came out today, and it wasn't didn't meet expectations,
right.
which is good for interest rates. Is it good for the people that lost their jobs? Absolutely not.
Right.
But it is good for borrowing purposes. And so what I'm thinking, I'm going to make a projection that the Fed will do 1 rate cut this year. My guess will be maybe September timeframe or somewhere along those lines.
Yeah.
That will help. The market's kind of already priced that in. Mm-hmm. So we'll kind of see. But I think that we're heading to a place where rates are going to dip a little bit. It might not be this year. It might be, 2025. There's a little anxiety about the election and stuff like that.
Sure.
That always has, traders anxious on which outcome that's going to go.
Traders and traders. Just kidding. No, you're right in that. I guess I picked the same concept. I thought there was going to be a at least 1 rate cut prior to the election, and that is hopefully not due to political reasons, and it is due to helping people get into homes based on the economy and what's going on. I mean, obviously there is a lot of unknown for the next several months that we're going into. But one thing that I have to kind of hang my hat on is that we live in Texas and real estate is always local. And what I mean by that is our values historically have withstood the testament of time. Taking a snapshot back, we've at least got a year over year 5% or so increase in our value.
Right.
Over the last several years, it's gone to 30%. Now, when we see prices dropping, I don't think that people are taking that the right way. Values are dropping. Are values dropping, or are they adjusting to what they should be based on these higher than normal, higher than average list prices?
Right.
You know what I mean?
Or, during 2021 and 2020, 21, when home prices skyrocketed 20%, and now they're making a 5% correction. Like, well, did you lose money? No, you didn't.
Right.
You still realize that appreciation.
Yeah.
But we haven't seen a lot of values go down per se. Texas has insulated itself with they have pretty strict borrowing laws. You can't pull equity more than 20% out, or you can't have a loan to value more than 80% if you want to pull money out.
Right.
Whereas like some other states, you can pull cash out up to 100% of the value of your property.
That's crazy.
Which is really crazy. And I remember, in the 2005 and 6 and all that, I think Californians were able to do like 105%, 110% loan to value because their property values were going up so fast. Mm-hmm. Some of the areas that we're seeing a little bit of I've noticed a little bit of a slight decrease is Austin.
Okay.
Because of COVID, you had so many influx of new people coming in from out of state. In California, up and down the West Coast and East Coast, they're moving to Texas because we had less restrictive laws because of COVID. And so you had a tremendous influx with Tesla moving here and Hewlett Packard and a whole bunch of these big, huge companies. So the prices just shot up through the roof, and it was very difficult for an average person to afford. A house. A modest house might cost $600,000.
Right.
In Austin, and we're seeing a little bit of a correction. Right. That prices have come down just a little bit.
That's right.
But in San Antonio, we were pretty insulated.
Yeah, and I think you're on the money in regards to that. Matter of fact, a lot of the folks that were going to purchase in Austin, seeing what that market was doing and kind of being priced out, ended up purchasing in San Antonio in that kind of corridor there, which is what's keeping those prices not only steady, but also rising. I mean, you look at Seguin, you look at New Braunfels, that area is consistently increasing in value. I'm still seeing multiple offers if they're listed properly.
Right.
So those of you that live in Austin, have no fear. I don't think that the bottom is going to fall out because, number one, we still have plenty of people from California, New York, Washington that are coming here. Matter of fact, out of the country coming here. They're paying cash for stuff. But the good news on real estate is as long as you hold the real estate, or as long as you can hold the real estate, you'll get your money back. And I don't think we're in a situation to where we're even close to being upside down in a home substantially to where you've got no choice.
Right.
Now, Austin was one of the ones where I did, for the first time ever, see somebody go like $200,000 over and get excited when it was only $100,000 short on the appraisal. I'm like, okay, so you're going to put $100,000 cash. Bye-bye. Cool. Let's go.
Yeah, today's market, I mean, we all make qualified mortgages, right?
Yeah.
And so we verify the income, we verify, where the assets are coming from, and we verify the value one way or another. So, when the crash back in, 08, 09, if you could fog a mirror, you can get a mortgage.
That's right.
All you needed was a 700 credit score and state your income, and then you got a mortgage with no down payment.
Yeah.
Which is kind of crazy if you think about it. And so, of course, when, that's going to send prices up across the country, and something's got to give.
That's right.
And when those mortgages started defaulting, that was the breaking point.
That's definitely how it went down. Even though I wasn't in the industry then, I was still in the financial world. I was a banker, business banker for Chase, seeing it. I mean, didn't really know exactly what was going on because I hadn't delved into that sector all the way yet. But man, it was like, holy cow, that's happening. Yeah. Glad we put the regulations in place, and I'm glad there's people like you still around doing what you do best. You know, it's true.
Well, thanks, Mark.
Absolutely. Well, John, is there anything that you'd like to let our listeners know? I mean, this is your time now. If you want to let them know anything, by all means, the floor is yours, because then I want to read one of these cards.
The only thing I could think of is you asked me a question at the very beginning is like, can a non-veteran get a mortgage?
Yeah.
And a VA loan. And we discussed the spouse or surviving spouse. Technically, if I was not married and my sister and I wanted to buy a house together, she can be on a VA loan and we're not married. Now the VA says we'll have to put down 12.5%, but she will still be on a VA mortgage.
Boom.
Because the VA guarantees 25%, but only half of us are veterans and we're not a spouse. And so we'll say, okay, there's only one, so we'll do 12.5%.
You know what? You're 100% right. And I think that's only come out one time in my entire career, but that is accurate as all can be. Wow.
But still no mortgage insurance.
That's right.
And still get the lower rate.
That's exactly right. So, yeah. Wow. Well, you heard it here, guys. You may have to run that back to make sure that you understand what he just said, but it is totally possible. Holy cow. I totally forgot about that.
Yeah.
Wow.
You don't see it very often.
No, you don't, but it's still there.
Absolutely.
And that's what's important. The other thing that's important is that you guys out there are still tuning in. And I'm really hoping that you got something out of this VA discussion or learned something about John Hurd and his team. But we are going to continue to give you guys good discussions, transparent, honest, upfront, from those that have integrity and are willing to share their experiences and their values with you guys. So as always, John, thank you for joining me today. Pretty good job on a first podcast, brother.
Thanks for having me, man.
Absolutely. Happy early birthday.
Happy birthday to you, brother.
Boom. Guys, we will catch you on the next one.